Okay, hi everyone, we're going to start now. Thanks very much for joining me today. I really appreciate your time. And welcome to this webinar, How to Keep More Cash in the Bank, Ensure Continuity and Impact Business Growth. We're going to start now. I think it's already the time. Right, so a little bit of housekeeping just before we start. I'm going to be talking for about 40 to 45 minutes, and then there will be time for Q&A. I would like to ask you to use the Q&A function to ask any questions. If you would like to post anything in the chat box, that's not a problem at all. If I'll be asking you questions for interaction and so on, please do post these things in the chat. However, if you do have any specific questions, I would appreciate if you use the Q&A function, because it's just much easier to track what I have answered or not. And I will answer the questions at the end of this webinar. And in case we don't manage to cover something that you're interested in, I'll get back to you on that later. The recording of the webinar will be provided. So if you have registered, you will receive the recording from me via email tomorrow after tomorrow. I would really like to ask you to turn off all the distractions and listen to the presentation. I do encourage to take notes. I have to say that I go through a lot of material. I tend to speak a little bit, sometimes a bit too quickly, but I will try to slow down as much as I can. And if there is anything of particular interest, I would really appreciate if you let me know. These masterclasses actually have been more and more popular. There's more and more people joining them, and I always appreciate any topics that you would be interested in, and examples you would like to see, and so on. And I will obviously take any comments into consideration and use them in my future masterclasses. I usually do these once a month. My trainings and the sessions are very practical. There's no sale or anything like that. What I do go through quite a bit sometimes, so I recommend that you just choose a few actions that you can implement from what I'll be talking about, or that you can implement it. Choose few actions, and also it's not always that you have to implement these actions. So a lot of them are maybe finance related and so on. And if you do have admin related, operations related, if you look at the team working with you, make a note of them and see who you can delegate them to, and just how it is, just make sure that it's just reported back to you. Now, the reason why I've done this masterclass is, and I know that obviously the situation is quite challenging at the moment, and there's a lot of new questions, challenges coming up all the time. Before this webinar, I asked a lot of questions to business owners. Like I said, this particular webinar is tailored and more for creative agencies and service-based businesses. So, for example, things like inventory that might be important. It's not something that we're going to be talking about today. Now, in terms of the way we manage our businesses, and even I myself, sometimes how I manage my business, we do ignore sometimes our financials and don't spend enough time and pay attention to it. However, obviously, the times we are in, it seems like more and more people paying much more attention now, and cash flow is obviously the most important topic, and actually it's a critical topic in the times we're in. It's always critical, but now particularly. What I would like to show you is that certain practices that you can have in your business, they're not necessarily very stressful or very complicated. You can have them easily implemented in your business, and then they can really help you. And instead of maybe wasting your time or being really anxious and nervous, you will have more energy that you can then spend on servicing your clients, and focusing on your clients, and focusing on delivery or business development. What we're going to cover today, first of all, we're going to talk about cash flow, how to best manage your cash flow, and identify any opportunities to increase it. We'll be talking about the easiest way to get a handle on your finances and how to monitor your business performance. We'll look at 9 ways you can impact your business profitability, why we should be looking at it now. And then I will list some action steps that we can take now, or to start preparing our business for recovery, and then for business growth next year. And basically, what can we do to plan for next year and do our best for that year to be better than this one, basically. Very briefly, for those who don't know me, I know that there's people in this webinar who are, it's not their first time, and I really appreciate you guys being here. But for those who aren't here, who are here for the first time, I want to introduce myself. And my name is Agi. I run CFO for Growth, which is an agency, a company that basically runs a virtual finance department. We're helping business owners, service-based business owners and agencies drive revenue, cash flow, and increase profit margins. I used to work as a financial controller before in Europe and Middle East in various sectors, various industries. I'm also accredited business consultant, and I used to be a startup mentor too, back when I used to work in the Middle East as well. Most of you are connected with me on LinkedIn. These are my details. You can check on my website, and also by all means follow me on Instagram or get in touch with me on LinkedIn. By the way, you will receive the presentation after as well, so you can, all the details will be on the presentation. Now, the presentation is particularly for businesses who really want to concentrate on growth. On growing the businesses, and increasing the profitability, okay? Increasing cash flow profitability, and they are determined to take the business forward despite of the circumstances, okay? And now it also might be for you if you're losing visibility over your business performance. So you might be concerned that maybe you are not really in control or clear about your financial situation. This happens a lot, and if this is one of your concerns, I think you also will take a lot of value from this webinar. If you want to generate consistent cash flow and improve your cash flow so that you can have income for you and your team, that's also for you. And basically, you want to feel much more in control. I added this slide just before actually our presentation, because today I attended a very interesting presentation run by a company called BVA BDRC. Basically, they are market research and consumer insight company, and they were discussing today our approach, our thinking regarding the lockdown situation, how much we trust the government, how much confidence do we have, are we worried or not in what's going to happen going forward. And that particular slide was quite interesting because it basically shows that 1 in 4 business owners, business leaders is not confident currently, and that's in the UK, if their company will survive this crisis. So, I don't mean to bring anybody down. It's quite actually a scary statistic, I think, but we are not sure at the moment if we can. A lot of us are not sure if we can survive the current situation. Obviously, if you contrast this with businesses that are leisure, hospitality, or in art sectors, for them that percentage is much higher. It's 45%. And the reason I'm showing is that I'm sure, for all of us, we are all impacted. Okay, there are sometimes, I receive comments from some other business owners who say that it's business as usual, but I think in one way or another, directly, indirectly, we're all impacted by the situation. Having said that, the goal for this masterclass, for this particular webinar, the goal for me is that we think about the future of our business, our future, and the future of our business. Okay, so we're going to start with the teaching content, and first we're going to discuss the cash flow. So how to best manage our cash flow, and what can we do to increase it? Okay, now for me, when it comes to superb cash flow management, as I call it, there's 3 very important elements. And first of all, it's about cash flow planning, so future thinking, planning, and forecasting. The second point is building an emergency fund, and then managing your working capital. Managing working capital means basically managing well and properly money that is already in your business, that has come into your business. In this we're not going to cover it all, obviously, in this class. However, we'll touch on a little bit on planning while it's important, and then we will discuss the working capital management and what we can do to improve it in our business, and how we can impact our business. Now, with cash flow planning, one of the reasons of why I wanted to mention it is this, because of the Leave No Business Behind movement. And I'm not sure if you've heard about it at all, but that was a movement organized by a company called Capitalize, and actually it was directed to accountants or finance directors, and in general people, companies providing services similar to mine. And the reason why they decided to run with this campaign and create this movement is that in July they've done some research among the clients, customers in July, and it turned out that about 70% of businesses decided to obviously take on the help available from the government, and I mean the help in terms of deferring their taxes. Now, obviously that's quite a big amount of businesses, but obviously this is, we've got that option, we're going to take advantage of it, and that's no problem. What they found is that this is despite of the fact that we are deferring the taking loans, deferring the tax payments and so on, many businesses really don't have a plan on how to repay it, and they don't actually have cash flow forecast in place. So for them, and they encourage accountants, again, finance departments, so on, to take some kind of, it's what they call the pledge, that we're going to really teach and talk about how important cash flow planning is. And this is why I also really wanted to put that in this particular masterclass. Again, but cash flow planning is pretty big for business continuity growth, no doubt about it. And I really would like to encourage you, to have at the 12 or 13 weeks, as we call it, 13 weeks cash flow forecast in place, at least, at the very minimum, okay? Again, this is not the topic that I did speak about that before in much more detail on how to approach, how to do a forecast like that. It's not for this particular masterclass, but what I would like you to know is that it's why it's really important, okay? So when you're looking at your cash flow forecast, and when you're making any business decisions, it's really important that they are reflected in your cash flow forecast. So obviously we put it together, we map out our inflows, our cash outflows, and then whenever we want to make a decision, either defer the tax payment, decide to apply for a loan, postpone a payment to a supplier or anything like that, we can then obviously input all these decisions that we made in the cash flow forecast and see the impact that decision had on our bank balance. So this is really important. Cash flow forecast will show us the immediate future of our business and what's going to happen, and if we're going to have any big crunch points, so points where basically we might be in a negative position, right? And another thing I also wanted to mention is that very often seeing things black and white on a spreadsheet will add some additional motivation and impetus to collect the money that we are owed and generate revenue. Okay, this is just an example here of a very simple spreadsheet. And the thing is with this is that obviously at the moment, you don't have to really use a spreadsheet, to do a cash flow forecast. For many, it's still the most convenient way of doing it. But now with all the digital apps that we have available, and particularly if we're on cloud-based software, Xero, QuickBooks, you will have a lot of add-ons, a lot of apps that will help you forecast your cash flow, the immediate cash flow, and also the long-term cash flow position as well. So that's actually very easy, and I think literally there's no excuse there. And with cash flow planning is we're trying to stack the odds in our favor. This is what I say. This is how cash flow really helps us. We stack the odds in our favor. We use the information we have and try to be conservative, and this way we can really see where we're going, where we are at any point in time in our business. Right, so excuse me, sorry, okay. Right, so now in terms of looking at our opportunities and weaknesses for cash flow management, okay, what's really important to know is that it's the balance sheet review is where we're going to notice any opportunities to increase our cash flow and find any cash flow bottlenecks. I know that all of us, obviously, we look at the profit, we look at the P&L. However, one of the biggest issues when it comes to cash flow management is obviously timing, right? So the thing is that when we make sale, it doesn't mean, and we show profit in our bottom line, it doesn't mean that we actually have received cash in our business. And I'm sure you are aware, you obviously will have situations where you have invoiced clients, right? So you will receive maybe a deposit straight away. However, before you receive the remainder, it might take weeks or even months, and hopefully, not years, but even that obviously happens a lot. However, what we do want to do as well is to review the balance sheet, because some people say, we say that as accountants, finance people, is that from financial perspective, nothing else matters. It's the balance sheet matters. Okay, on this slide, I marked a few elements which are cash, accounts receivable, inventory, and accounts payable. These are the main elements that are a part of what we call working capital. And without, I don't really tend to use any very big accounting words when I do these webinars, but I think it's really important to just understand this concept. And in the most simple way, a working capital basically means, are you producing enough cash, enough income in your business to pay for your current obligations? It's as simple as that. So do we have enough cash coming in to be able to pay what we've got outstanding? And that review, the review of working capital, will flag any cash flow issues that we might have in our business. But at the same time, it will also help us identify opportunities that we might have to increase that cash flow and increase our bank balance, because that's ultimately what it is about. Now, we've got 4 steps to improve our cash inflows. Okay, this is from the perspective again of working capital, which means from a perspective of managing in a correct way the money that we already have in our business. The first thing here is manage our debtors. Okay, so we have definitely, a majority of businesses, unless you're a cash-based business, which I think from, attendees here, people interested, is quite unlikely. You will have debtors review. So you will have people who have outstanding amounts and owe your business money, right? So what I would really recommend that you do is that you have a weekly debtors ledger review. Usually, if your business is not really strapped for cash and things are going well, I would encourage to have this review maybe on a monthly basis. But with the situation that we are in now, really look at it on at least a weekly basis, because your customers would have been affected by COVID-19, right, by the situation. And it's possible that where they were, the beginning of the whole situation, the whole crisis, they might have reacted more calmly and they were fine and so on. But as we go along deeper and deeper in the crisis, and it's not really finishing, at least not yet, they might be affected in different way. So that's why, here you've got a question on the slide. How is COVID-19 affecting your clients? Do you have any clients that are maybe in the high-risk industries, restaurants, hospitality businesses, events, companies? And obviously, this is they might have much bigger issues when it comes to paying you. So please analyze their ability to pay down your outstanding amounts. And many of them you will experience, and I'm sure you have already experienced, that they affect they have some, they're feeling already some drastic effects. And with them, it's really important to emphasize and also support them as much as you can. But then, at the same time, you really need to take care of your business. So see if you can come to some kind of agreement and payment plan and so on, and really make sure that you also take care of yourself, your business, and your team. Right, so Another aspect of cash flow management is when it comes to your contracts, right? So you will have clauses in your contracts. Make sure that they are enforceable. Make sure that you've got all the payment terms very clearly laid out in the contracts, and also have a think about if there is anything you can do to receive upfront payments. Okay, so either have a deposit, negotiate progress payments. So for a lot of work that you might be doing, that might be project-based work. You know, it's very customary to get the deposit first, and obviously have them maybe agreed certain milestones and progress payments, and all this can be incorporated in the contract. Include late payment fees. Make sure that you also run a credit score check on your clients. Just, you know, as much as you can, protect yourself from the clients not paying you. Another thing is then processes and procedures. Okay, so what we want to achieve here is to remove any friction and make it as easy as possible to pay for the client to pay. So offer alternative payment methods. Direct debit, it's always for us the best. So using a tool like Go Cardless, it's you know, it's a life-saving tool for many businesses. It's really convenient and so on. But I know it's the reality that it's not always that easy to request the client to be on direct debit. So obviously then just see what are the easiest payment methods to them. And what you would like to do is to, you know, speed up your debt collection process. So again, so that you do not waste time, so that you don't waste the money, and you can have certain procedures or processes implemented before that, so to get this process to make it much easier for you and for your client. So yes, so we have to make sure that use the right information, to get invoices out very promptly, to request a confirmation from the client. And another one is to take into account your client's procedure as well, because particularly if your clients are corporate companies, big companies, they might have a requirement for a purchase order number, or for example, they're only doing payment run, paying only once a month. So these are the things to be mindful of. And even if they seem quite basic, the reality, and from my experience, is that, you know, many businesses do not actually have these processes in place, and they are quite easy, you know, of having a formal process, a formal follow-up. It will really, these are sort of easy wins that you can have in your business that will really improve your cash management in the company. And another thing is as well using the automated, so again using apps. I will mention later as well, an app like Chaser, that it's an easy add-on to Xero, and can really help you out with this process. And always involve your team. Probably this will be a trend that I might mention two times more, maybe in this presentation. Your team needs to know their responsibilities when it comes to debt collection and to making sure that the clients are paying. Very often they will have very good relationships with your clients, so get them on the ball on chasing the debt, and also make sure that they are aware. So that they will not make sale to clients where you've got, you know, funds outstanding, and that there is some kind of process where you keep everyone up to date, and you communicate to them, and they are aware of any outstanding balances. If you would like to find out more on this topic, I encourage you to go on my website and get this guide. This guide is much more comprehensive in terms of, you know, a checklist and finding out exactly of what you can have, what you should have in place to make sure that your clients will be paying you on time. When it comes to cash inflow as well, obviously that's another aspect of increasing the cash inflow and improving your cash flow, is that we've had government help, right? So make sure that you take advantage of it, and I'm sure, you know, you guys are definitely on it. You have definitely, you know, you use the furlough, the grants that businesses, that the government offered. You might have used the loans and so on. There is a lot of support additional support depending on the sector, depending on your, if you've got on a rateable value of the business, depending on where you are in the UK. So make sure that you keep, you keep track of it, because it's changing a lot, as you know. I'm sure you realize you're changing a lot. But always, whichever again decision you decide to make, and in this respect, make sure that you include it in your cash flow forecast. When it comes to cash outflows, I will also have a few tips here on, because when we were looking at the balance sheet, for us, in our interest, when it comes to accounts receivables, this is where we want to, obviously, this is the money that is owed to us, and we want to decrease this balance. When we're looking at the payables and the money that we owe to others, we want to, in a way, increase that balance. So in our interest is to increase the accounts payables. From like looking at the balance sheet. And obviously this doesn't mean that I'm encouraging everybody to stop paying the suppliers. However, make sure that you pay them on time, that you review your suppliers. Don't pay everybody straight away. Pay them on time, not too early. The situation is what it is. And again, just make sure that you've got some kind of plan and process in place, and you know exactly when you should be paying which supplier, and always communicate with them. Even if you've got situations where you've got delays in payments, I always encourage to be transparent with your suppliers. And then with cash outflows, another aspect of that, and what we want to do here is to obviously look at our costs. And again, that was a topic I was talking much more extensively in my previous webinars. I'm not going to be discussing this in detail, but I all the time encourage business owners to look at the costs, but from higher level, from sort of look at the like from a higher level, a big picture when it comes to costs, and look at it in a way that, first of all, you put together a plan that it will be a cost optimization plan, not necessarily just a cost reduction plan. Big difference here on how you, and a plan where you know which costs, where actually to spend in your business, and how to, but the best to use it for the betterment of your business, and to increase the profitability and cash flow in your business. And the way to approach it is to start, questioning each expense that you've got in your business, and thinking about it as an investment. So, and it doesn't mean, again, that investment might generate, directly sales or directly increase profitability. But if it is a type of investment, for example, that will free up some of your time, that will also be an investment, right? Because if you've got more time, means you can, concentrate on your clients, on generating more sales, and so on. So this is just another thing for you to think about when you're looking at the cash outflows, and on how to, again, improve cash flow in your business. Right. And another perspective now, when we're looking at improvement of our cash flow and what we can do to get more, we have more money in the bank, is obviously looking at our profitability. I'm not sure, for many business owners, and it really depends, I'm not sure, here in the audience, when you're looking at your goals, the goals for your business, is turnover your main goal? I really would like to hear from you. Okay, is this when you're looking at where you want to be in your business, is it turnover that you concentrate on? Because usually the first thing the business owner tells me what they would like to achieve is to increase the turnover year on year. And very often there is really no further analysis behind it, and analysis regarding the profitability of the business, and then also effort required to get this turnover. That's why I really would like you guys to take profitability of your business into account, because more revenue doesn't really mean that you're going to have more profit and therefore more cash in the business, right? Because we've got a lot more to consider here. And profitability is very important. It's a way for you to grow your business organically. So if you choose to use investors, this is absolutely not a problem, and it can be great for your business. However, some people decide to bootstrap, right? So basically, they will use the profit to build and to grow the business and to build the business further. The more profit obviously you have, the more obviously you can then reinvest it in your business for your business growth. So this is not only about the business survival. And like I said at the beginning, it's not necessarily what we wanted to concentrate on. We want to concentrate on growth. Therefore, we're looking at increasing profitability. Now, the most simple way of looking at profit is sales less costs, right? This is the profit equation, as we call it. It's really simple. Everybody understands it. But then, if we dig a little bit deeper and look at it in more detail, we can then expand this equation a little bit, and instead of our sales will be the elements that we include in sales will be the number of customers we have, number of clients we have, how much on average they spend with us, and how often they purchase from us, right? So this is where we can, it's a much more detailed way of how we can analyze our sales. And then when it comes to cost, we've got the variable and fixed costs. So obviously cost that will change as our sales or our revenue changes, and cost that will always, over our overheads that will always remain the same. Now, how can we impact each of these elements, right? And there is quite a few ways we can impact these elements, and I would like to, and this is where you can see here on screen, right? We have what we call drivers of profit, right? So we have 9 ways of how we can impact our profitability or manage our profit. Really, some people say manage profit. Really, profit is not something that can be managed, because profit is an outcome really of how we manage several aspects of our business. And here we have increasing numbers of sales leads, converting these sales leads into clients, increasing average spend per client, increasing the frequency of purchases, then increasing client retention, looking at our pricing, very important, then looking at reviewing our variable costs and then fixed costs, and then finally creating systems and efficiencies. So as you can see here, there is really many ways in the business that we can impact profit, and they are not necessarily just finance related. There's really across all the departments: sales, marketing, customer success or customer service department, operations, finance. So all departments would be involved in the way we can drive this profitability in our business. When you are choosing, it's really difficult obviously to choose. It really depends on the business, on your circumstances, your goals, on which one to choose or to focus on, right? And probably the answer would be really you should be focusing on all of them, or at least in some part looking at all of them, and take this list into account when you're putting together your KPIs or goals for next year. But the one I would like to discuss a little bit in detail, and just here in a few minutes, is pricing. And the reason why I'm talking about pricing is because it's really the biggest impact on profit, and very often an immediate impact on profit. So it will really have an impact on your bottom line. Now we've got a few types of prices. These are the most obvious ones. We have cost plus pricing, tiered pricing, value pricing. There is many more ways you can approach, but these are the most common that I see and most evident for majority of the businesses. Cost plus pricing, I'm sure you know, you take your hourly rate, add a margin on top of it, and that's your price. And basically you charge per hour of your work. Tiered pricing is where maybe you might have people at different levels in your business. So you will have an assistant or a manager, and you will price their time at a different level. So this is where you've got tiered pricing. And value pricing, obviously, what people call the holy grail of pricing, is where you charge your clients based on the value that you provide. But very often the problem or the caveat here is that the value is as perceived by your clients. It does not necessarily be as perceived to you. That's why there is really a lot of aspects in value pricing that are very important before actually we can get onto that type of pricing, or be able to explain that value to our clients. There is a lot of elements here. Now, the reason why I wanted to for you to look at it is, like I said, pricing's got a very big impact on your profitability, okay, and and also on the profitability of your clients, of the clients' accounts, or of the project that you're taking on in your business. Now, when we have a good economy, very often this is where we might be ignoring it, because if we do have certain project incorrectly priced, or a client that maybe is not achieving enough gross profit, or it's even in a negative profit position, it happens a lot. We don't see it. The business is performing very well, and overall we're very happy with our results. So we don't really get into details, we don't analyze it, we do not see if there are any loss-making services in our business. But here we've got an example. I just put together a simple example for you, that you might have certain clients on also projects, depending on how you're looking at it, that actually, you've got certain revenue you're achieving per clients, but the cost to service is higher. Too high, in some of them higher than actually the sales to that client. And this is where basically it's a very good idea to analyze it and to spend a little bit more time and to check what's your gross profit per client. Are you able to even calculate it? Because very often we don't actually have tools or processes in the business set up in a way that we can even calculate how much the cost to service was. So I do hope you do have that in place. And then, it does not take really that much time, but if you take into account your major clients and see what is the gross profit or the gross profit margin for each client. Another thing to look at when you're reviewing your profitability, and again, your clients, is the lifetime value of your clients, right? Or how much does it cost for you to acquire a client? And obviously, hopefully your acquisition cost is lower than the client lifetime value. This is what you want to achieve. Often we will have obviously the Pareto principle here working as well. So we will have 20% of clients who will deliver to 80% of your profitability, of your bottom line. Is this something maybe in your business is missing, and this sort of analysis, and something that maybe you could look at? And I'm not really encouraging at this moment, we are in a very sensitive time, to maybe increase the pricing, but definitely look at it and review your pricing strategy, and see where you are. So you see where you're, against your competition, and is there any space for you to maybe increase? Maybe you are undercharging yourself. Okay, so I hope so far this is all clear for you. I think we are quite behind. I'm going to speed up a little bit. Right, so the third part here is what is the easiest way for us to get handle on our finances? So that's one of the biggest complaint that I can hear from the clients. So maybe this first one actually is about their clients not paying, but the second is just the lack of visibility and lack of clarity on where they are in terms of finances. And I wanted to put together also a brief answer to this, because there's two elements for me here. First of all is the KPIs, so that you decide on what actually it is that you want to monitor in your business, because you will not be able to monitor every single figure. I mean, it's just data overload. We live in times where actually collecting data is very easy, and with cloud-based accounting and all the software and tools you've got available, you can get the data in a quite easy way and quickly. But then what happens is just too much data. Financial statements are very often too detailed. They have a lot of information, and for you as a business owner, it's not necessarily what you should be looking at on a daily or weekly basis. However, what you should be looking at is certain KPIs that you decide are important for your business. So first of all, you do decide on the KPIs, so what it is that you would like to achieve in your business, and then first decide the goals. What are your business objectives, and even personal goals as well? That's very important. And how this can be incorporated then, and obviously quantified, and then monitored in the form of maybe a dashboard or so, and monitored in your business through an accounting software. I will give you a few suggestions of how you can actually, and what you can take into account and how you can choose your KPIs, right? Because there is a mix of KPIs probably you should be looking at in a business, and it doesn't necessarily mean that they are all financial KPIs. Again, it always depends on the what you would like to achieve and what are the maybe problems or challenges that you feel you have in your business, and they could, if you change them, they would really have the biggest impact on the performance of your business. So you can have always a mix of leading and lagging KPIs. So obviously leading KPIs that will be looking at the future, and lagging that will be measuring the past. And very often it could be at the same KPIs. Okay, there could be the same KPI. Then we have financial and non-financial KPIs. So obviously we were talking about gross profit, for example, that's financial KPI, net profit. These are financial KPIs. Then we will have KPIs regarding your working capital, right? Regarding how liquid your business is, and so on. There is quite a few to choose from. And again, I will give you a list of a few examples in a moment. But then you also have non-financial KPIs. So for example, financials regarding your staff, your turnover, or customer satisfaction, like for example, NPS, right? Net Promoter Score. That's another example of a non-financial KPI that you might actually be looking at. And another thing here is also done depending on the industry you're in. The KPIs might be different, because it's very important that you look at your KPIs in relation to something. And if you are able to get the data, and your accountant very often might have the data, if they have a lot of clients from the same industry, they will know what is a good gross profit margin and what's bad gross profit margin, right? What's if you're achieving 10% net profit, is it good for for your business? Because sometimes you would say that net profit is good for restaurant, is probably very good net profit, but is it very good net profit for creative agency? I'm not sure. You might be able to actually achieve bigger, a higher net profit margin in a creative agency. So the examples of numbers you can look at is here. So there's hundreds literally of KPIs, but I just put together a few, one of the most important ones. For example, growth, right? Your revenue growth rate could be a KPI you want to look at. Your profitability ones I already mentioned: gross profit, net profit. Number of leads, what is your conversion rate? Very important KPIs. Your customer acquisition cost, your billing capacity versus your utilization rate. So very important for a creative agency, for any service-based industry really. Or your average revenue per client, average project value, for example. That's another example of what you could look at. There is other things you might be looking at, you want to look at in your business. Okay, so for example, you want to always have on your dashboard, at a glance, always available for you, your cash forecast balance. So anywhere you're going to be in 3 months, in 90 days, or your outstanding debtors. If that's a problem in your business, it might be something that you want to have updated very, very often, very regularly, so that you are on top of it and you're reviewing it. And then what's important when you're looking at the KPIs is that what do you want to compare it? So for example, to compare it to. So your goals, your last year's performance, maybe not that relevant, to be honest, now in the current climate. But if you set your goals, or again, maybe you are aware of some industry benchmarking and standards, and you want to maybe, you relate your results to that. And I already said, so a dashboard is a great way, again, with tools available for reporting. Really, there's again no excuse. And you could have an Excel dashboard prepared, that's not a problem at all, but you can have a dashboard with real time accounting or information and the information flow. You should be able to have very current information for you, ready to review on a weekly basis. And another thing is that I was reading some time ago about The One Thing. I'm sure you know The One Thing is the book, which is very highly recommended, by the way. But also in accounting, we call it, we've got something that is called an economic driver, and that's basically the one driver that you decide to choose that you know will have the biggest impact on your business result. So have a think about what's that one driver for you, and just look at it very regularly. Put together a plan on how to achieve it, how to increase it, but then you will have that focus, really focus on one key metric that you want to monitor in your business. And again, involve your team in this. Talk to your team and try to already start implementing this profit culture. And I don't mean only about money making or anything like that, but see if your team can be involved. You've got certain goals for your business, and try to encourage your team to also, and to get the buy-in from your team for your goals. And you can even have a separate dashboard for your team. That's because you will probably very often look at different data than maybe your teams, but it's very useful that they are involved, they know what's going on, and they know that the company is actually achieving great results in the important areas of the business. Okay, so we are almost there. So like I said, we talked about cash flow, we were talking about how to get the handle on the finances, and we were talking about how to impact profitability. And now the final part of the presentation of the training is where I would like to show you a few examples, a few actions that you can start taking. Because like I said, for me, it's all about thinking, where your business can be in the future, okay? And where you want your business to be in the future. And there are certain action steps or certain things that you can be implementing now in your business to help you. The first one is the forecasting. And I know many people don't really like this word, but I do really recommend having a forecast in your business, but it has to be a live forecast. So if it's not the document you're using, there's no point really. That's why I say to people I work with, and in general recommend to move into a 12-month rolling forecast. So every month you review the next 12 months in your business. Use recommended tools for growing business. So if I deal with a high growth business, there's two main tools that I recommend is the cash flow forecast that you look at either monthly on a week or monthly or weekly cash flow forecast. And this depends on your situation, on where you are in terms of your cash flow. And the second one is the three-way financial statements, because really this is how if you're a high growth business and you're getting bigger, it's very important that you don't only have your P&L forecasted, your profit and loss. You also have your balance sheet forecasted and statement of cash flow. And that's your long-term forecast for the next 12 months, again, minimum. And the way we call it is called a three-way financial statements, because it's the three main financial statements forecasted. As I mentioned before, I pointed out the profitability drivers. So decide on the ones that you want to focus on in your business. Have a think about the zero-based concepts that I mentioned, and zero-based your expenses. So next time you're actually approaching, or maybe you have done or in the process of budgeting for next year, instead of looking at the historical data and the cost you achieved, you had in your business historically, just don't look at it and just open an empty spreadsheet and start from the beginning. I know many businesses are now in a situation when they're implementing that way of thinking, and I would really encourage you to do that exercise with your team. Now, again, another step is to look at your procedures. Okay, so procedures and processes in your business, they can really help you strengthen your business and business efficiency. Okay, so credit control, for example, process that I was talking about, that's one of the things that you might maybe want to revamp in your business, because if you feel that this is where your business is lacking, it's just something that you could implement or document and implement. And very often, you invest a little bit of time in this at the beginning, but then it serves for a long time, because if you put together in a solid process in place, you only have to do it once, and only maybe review every year or every 2 years, and so on. Another thing to consider is digitization and automation. So as we know, we've got loads of new apps coming in and new software that can help you in your business. And it doesn't only have to be financial, but also operational for projects, management, and so on. Sometimes I am really surprised with owners who are not even on cloud-based accounting software. And if you are not, it's very crucial to get that going and go on to maybe Xero or QuickBooks, because sooner or later, with making tax digital, that it's coming, it is postponed, but it will come eventually. You will basically have no choice. Okay, so to have that in place, we really need to make sure that we are on a cloud-based outcome, or cloud-based platform, or I mean, it will be possible, but basically for this to be much easier for you, and again, less time consuming. These platforms are very, cost efficient as well, so it's definitely something to look at. I mentioned Chaser for credit control, very good tool. Again, it's not very expensive. Go Cardless, Receipt Bank, and so on. Have a look at them and see if this is something that you would want to have implemented in your business. And again, there's only, I mentioned here a few, but there is literally hundreds of them now. Another thing is that if your business if your business dropped and you're in a situation where your business dropped, think about identifying the activities that will help you recover and grow your business back, and what is the cost of these activities, and then put that in the forecast and see the impact of that on your business, on your bottom line. Can you afford it? Is there any way you could invest in these activities, because you will want to make sure that you will recover and start marketing as soon as possible, because obviously you want to make sure that your clients do not forget about you and your business. Now, as well, I'm not really sure if you guys have business plans in place, and the reason why I put that point here is that I think you should always be ready to get the funding, but not only. Obviously, you want to make sure that you've got your vision, mission, and what you want to happen in your business in the next few years, and you have that really planned out. So you do have business plan in place. But another reason of why I'm putting that in is that recently there was a situation where in Wales there was economic resilience fund released, and as it turned out, the application were supposed to be opened for 4 weeks, but they weren't. They were only opened for a few hours. But the application was very difficult, and it required businesses or business owners to apply for the grant, but then justify the application and what are you going to do with that money and so on. And as it turns out, a lot of businesses basically weren't prepared, okay, so yes, the first problem was a lot of businesses actually applied, but then there are a lot of businesses did not apply in time because simply they were not prepared. They didn't have a business plan in place. They didn't have a proper cash flow forecast in place that application required. So I really would like to encourage you to have a think about it, have that plan, and always be ready, because you will never know if any additional funding rounds will be released. When it comes to the cash reserve, cash flow management, I mentioned at the beginning, having an emergency plan fund is crucial, it's critical. And I would like to encourage you to make a plan to put away at least 3 months of operational expenses aside, to always have that. There's other ways of looking at how much you should have in your emergency fund. And again, that was one of the topics I covered earlier. If it's something that you're interested in, please do let me know, and I will cover it in my future webinars. But as a rule of thumb, we can say 3 months of operational expenses, you should have it in a separate bank account that you can tap into in case the situation is bad again. And even that's not in your reach at the moment, I would encourage that you do a plan, that you make a plan on how you could achieve it in the future. And my final point is, there is certain pillars of financial management, okay? And we were discussing some of it here today. When it comes to financial management of your business, it's not only about having the compliance done. So making sure that your accounts, your annual accounts are submitted, your VAT return is submitted, or your bank is reconciled. Obviously, these are very important things and they're foundations, and you have to make sure that your business is compliant. But there is more to that, right? So we have we have the pillars of financial management. We have more to financial management than just the compliance work or the accounting work, and I listed them here. So these are reporting, strategy, forecasting, budgeting, and cash flow. These are the things that, again, it's important if you are looking to grow your business, if you're looking to really, strengthen cash flow in your business. Definitely these are the aspects that you should be looking at and having implemented in your company. Okay, so this is really almost, that's it from me. I will have a look at the questions. It's just before I finish, I had a few recommendations for you in terms of if this is something you would be interested in, maybe do some further reading. I would really appreciate if you let me know about what was particularly interesting in this webinar. Is there anything that you would like me to talk more about in much more detail? I realize that, there could be quite a lot, but there might be something, there was maybe bigger picture, but there's maybe something that you want me to get into in much more detail. I will be very happy to do that. And again, address in my future videos or training sessions. My recommendations here are a few books. Profit First, maybe some of you know, for business owners on profitability, very good book for anyone to read. E-Myth Revisited, it's a book I'm rereading now, a really great book, and for literally I think every business owner should be looking at it. Stark Naked Numbers, that book is by Jason Andrews. So he actually is an accountant based in Australia, but the concept that he covers in his book are relevant to anyone because they are much more finance based than actually accounting. Very good book, particularly if you are either maybe software-based, subscription-based, your creative agency or e-commerce business. Really, I recommend. Also, it's it's in the way that it's written. It is about numbers, but it's relatively light read. And then there is an article on the Harvard Business Review on the website. If you type in search "roaring out of recession," I recommend as well. I think it's very timely article and very interesting to read as well for every business owner. So if there's anything I could help you, I do invite you to a call with me by all means, or just send me a message on LinkedIn, connect with me on my email, agi@cfoforgrowth.com, and I'll be very happy to help you out. I do have a few questions, so okay, actually it's 3 questions and they're exactly the same. What software would you recommend for cash flow? Okay, for cash flow forecasting for a small business, depending on your accounting software, but I would to monitor operational cash flow, I would recommend Float. And there's few more, but I think this one is the one that is very good. And if you're looking at more higher level, maybe more long-term cash flow management and more forecasting, okay, in sort of the when I mentioned to you the three-way financial statement forecasting, which includes statement of cash flow as well, obviously. So it includes cash flow. Then for that software, I would recommend is Futurely. But this is maybe it's basically it's a bit more advanced software, I would say, but it also links to Xero, and it's a great one to have. It's something that I use for businesses I work with when we are doing forecasting, the 12 months or even longer, so long-term forecasting. Okay, everyone. I think this is it. Thank you very much. I really appreciate you being here. And like I mentioned, if you do have any suggestions for topics, I will really appreciate, and any comments as well, I will appreciate if you could send me an email. Oh, sorry, another question, right? Oh, thank you right now. Okay, great. So again, thank you very much, and I will appreciate any comments and questions and any challenges you might be facing at the moment that you would like to you would like to ask about. Please do get in touch with me, and like I said, I will get back to you. And also, it really helps me putting together this masterclasses and making them, making sure that they are very, very practical and useful for you guys. Thanks very much.